Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, and let's make it a great 2015, folks. This quote is by Maya Angelou. I believe the most important single thing beyond discipline and creativity is daring to dare. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials down 42. Nasdaq off 23. S&P's down 9. Gold contract up $17 at $1,199 an ounce. Silver up 44 cents at $16.22 an ounce. Platinum up 14 at $1,216 an ounce. Copper up 2.5 pennies at $2.85 a pound. Light sweet crude up 28 cents at $53.89 a barrel. Bonds, you have the 10-year up 5 ticks, 126.18. 30-year up 8 ticks, 144.04. King dollar down 216 ticks at 90.28. You got the euro flat at 121, and the yen is down 1.11 at 119.56. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? We're at 2082. And what's going to get intriguing here is that all this cash S&P has to do, folks, is get back inside 2079.47, and that would get you kicking off into the 2015 new year down to 1972. And then, of course, what we have still out there to be tested is the October 15th swing low of 1820. Bottom line, my take, that's where we're going. And that's where we're going, like, as soon as we start 2015. Dow Industrials, flat market out here. You're down 41. You're at 17,997. Inside the lower range is 17,991. You're right next to it. Nasdaq Composite. What do we have with the composite? Composite down 23 bucks. The composite didn't get over the highs. The composite, we're at 4783, and that high was out there at 4810. We got to 4014. That tested the high on the 26th. Dramatically lighter volume. Didn't handle it. Volume-wise out here, we're actually pulling back on light volume. We'll have a little bit heavier than yesterday, but it's still light volume. We're at 335 million right now on the NYSE. We take a look at the Nasdaq. The Nasdaq is at 943. Now, what will happen with the Nasdaq will have volume on the pullback, which is going to be a little divergence, meaning that you have that expansion going down. That's saying the Nasdaq's going to continue going down. The three Qs have done 12 million shares out here. They're going to probably do, 12 million. They're going to do maybe about 17, 18 million today. The three Qs didn't make it over their high. The high of the three Qs, the NDX 100, was 106.24. That got to a price point on Friday of 105.26. The SPY, we stay with the SPY. What do you have with the SPY? The SPY is at 207.87, and that's still over the high because it's 208.47. Gold contract. What do we have with gold? Guess what, folks? Since November 7th, you've had 4 different signs of strength in the gold market. Got one today, have one today, and the one you have today is really sweet because the equities are leading this contract. Thus far, we've done 129,000 contracts in the gold market. It hit 1210. You're at 1198 right now. This next expansion up will bring gold up to the 1256 mark. And what I expect we're going to see very quickly, too. You know, I say very quickly, 2-3 weeks, you're going to be banging up into this 1347 area inside the gold market. We go take a look at silver. What we have with silver. Silver's going to need more juice, but silver's acting all right today. Silver has 32,000 contracts out here today. Gold is still stronger than silver at this particular point. The first level up that I suspect we're going to get in silver is this 1735 level, and what you'd like to see inside the silver market is another wide price spread accelerated volume. The oil market. Oil is still dead in the water, folks, okay? Oil out here today, sideways move, 196,000 contracts. Oil's running down to 50 bucks. I suspect, who knows what's going on, but oil wants to actually go to $35, folks, okay? When we take a look at this continuous contract, here's divergence, and the divergence is pretty intense. Because what you do have is that the correlations that folks always like to do is between oil, gold, the dollar. Bottom line, folks, okay, is that gold's going higher, oil's going lower, dollar's going lower. We're at 53.83 right now, and the high of the low of 2008 is 54.62. It just can't get out of the way, man. And, you know, so I suspect that $32.40 is going to get hit, and that is bizarre. There's no doubt about that. But the way this is trading, particularly what you have is this. See, when you go down or go up, and then you start stalling, and that's what oil is doing right now, it's stalling, stalling, stalling. That's building cause for lower price. Bond market, what do we have with bonds? Bonds, you're going to have higher price, lower yield. Bonds out here today, the 10-year up 5 ticks. You are at 126.17. And this little baby wants to get up and test out the October 15th high, which is at 129.28. The 30-year is just lugging everything higher. U.S. The 30-year absolutely refuses to back off that that October 15th time frame. What you have out there in 146, you're at 144.08. And 146.16 has already got hit once. It's going to get up there. It's building cause right now to get hit again. But what it looks to me like is that this is going to be just a monster ABC structure on the top side. King dollar. Okay, now we're going to bisect and dissect King dollar, because King dollar, folks, okay, is at 90.27. If we take a look at the continuous contract, what you have is this. The continuous contract in King dollar looks that it wants to test the highs of 2005. We've already tested the highs of 2008, 9, and 10. And the spike high in 09 is 89.71. The spike high in 2005 is 92.53. Now, we've hit 90.66. You know, it looks like it wants to test it. But with that said, you know what? It's not going to matter in the metals market, because the gold contract, the gold equities, flat out, have not pulled back even with the dollar at those highs. What that's telling me, okay, now let's go over to the euro for a second. Because when I'm looking at the euro, it's like, you know what? We've gone straight down for 8 months. The dollar's gone straight up for 8 months. Coming into 2015, guess what we're going to get, folks? We're going to get intervention. And it's going to be our Treasury Department. Now, that's my speculation. If you get the gold report, you know that's what I put in there today. But the more I keep looking at this, technically it's set up correctly for a pullback. Fundamentally, it's a whole different ballgame. Because fundamentally, if you look around the world out here last night, the European markets, the Asian markets got hit pretty good. When I say pretty good, 1.5%. 1.75%. This strong dollar, you're going to hear the hypocrisy behind large corporations, large American corporations, that they had it with the strong dollar, folks. Because, you know, what you also have is this. So check this out. You're hearing on a continual basis from all the analysts. And all the analysts are basically saying that the S&P earnings next year are going to basically have the market go up another 10%. And it's one after the other after the other. Well, you know what? What they're absolutely not doing, okay? And, hey, maybe they did that analysis, that fundamental analysis, you know, 7 weeks ago, 8 weeks ago. Because what you're going to have, folks, is this. The energy stocks, the energy suppliers, they've gone from a positive, they'll lose money hand over fist. That S&P estimate, if you're a fundamentalist, that's going down the tubes. This is Tom O'Brien. This is TFNN. 877-927-6648. Dow Industrials down 46. Nasdaq's off 25. S&Ps are off 9.5. Stay right there, folks. Come right back.